Good afternoon. You're watching the Business Wrap segments with me, Ndogozo Khumalo, and in just under an hour, about 40 minutes or so, we'll take a look back at the biggest business economic news over the last 7 days. And of course, a hot topic this week is the Competition Commission Appeals Court's hearing against the prosecution of 28 local and international banks that allegedly manipulated the rand-dollar currency pair between 2007 and 2013. Now, hearings concluded on Friday with UK-based Standard Chartered Bank being the only one to withdraw its appeal and settle for a 42 million rand fine. And of course, that really got the conversation going with a lot of questions from South Africans when it comes to that settlement. A lot asking why not 10% of turnover, others saying that the bank's license should actually be revoked. So quite a lot of conversation that came out of there. And when we take a look at some of the comments that came out of Twitter, some saying, yes, President J.G. Zuma, of course, that's Jacob Zuma, was blamed for this. And there was several other conversations that took place when we covered this story during the week. Others asking how much did it cost for the investigation into the manipulation. And again, touching back at that 42 million that's been paid over by Standard Chartered, saying that it's hardly enough. And for a bank that makes billions in turnover every year, 42 million really being a drop in the water. Another user there on Twitter, or an X rather, saying why not suspend their license for 18 months? So really calling for much harsher, penalties for those banks that are accused of course, currency fixing that did affect not only South African businesses, but also, government's ability to be able to borrow from international markets, but also really the cost of living. Another user there saying £2 million only for currency manipulation. How much did they profit from their illegal conduct? And of course, this illegal conduct running on from as far back as 2007, according to the Competition Commission that took, of course, that case over to the tribunal. And then Themba Tutu there asking, can this manipulation be reversed and ease our cost of living? And that, of course, a huge issue for many South Africans that are saying, how did this currency manipulation affect them when it comes to that cost of living? And of course, we've seen interest rates rising that are also affected by some of that action that happens when it comes to the forex markets. And then just the last one, when it comes to the banks, you see when Malema says this banks needs to be understate. What about all of us who've lost forex trading during that period? So a lot of questions that are on the go there. And of course, unemployment also came out, and we saw a slight easing to 31.9%. So we'll take a look back at whether that is something to celebrate or not. And we'll run through all that and more. But first, let's take a look at economic news that are leading headlines, or that did lead headlines in the week that was.
Ratings agency Standard & Poor's Global kept South Africa's credit rating unchanged, with the country's long-term foreign and local currency debt ratings at BB- and BB respectively. Moody's says it's concerned about Transnet's financial position as its debt load piles up. The ratings agency has placed the rail and logistics firm on review for a credit ratings downgrade, citing its weakened liquidity. Transnet recently convinced creditors to move a 7 billion rand debt due this month to the end of March next year as it scrambles to find the money. The parastatal is also without a CEO and CFO, as Moody's says this poses a governance risk at Transnet. Transnet is carrying a huge debt of over 130 billion rand. The SA Treasury has already signalled that it will not bail out the company as it tries to manage overspending. The World Bank projects that the price of oil will drop by more than 25% next year. According to the lender's commodity markets perspective, the fast expansion of natural gas and renewable energy output is contributing to the gradual expulsion of coal from the power industry. South Africa's coal mining companies are already battling dwindling export volumes due to the country's inefficient rail and port system. The World Bank expects the price of gold, a safe haven in the time of geopolitical turmoil, to average $1,900 per ounce in 2024, which is 6% higher than the trading so far this year. Analyst Simon Brown says this is just the commodities boom coming to an end. The Energy Council of South Africa warns that the country's natural gas supply could nosedive over the next 3 to 4 years and could lead to an economic crisis. The council adds that Sasol is set to cut production of the fuel from Mozambique between 2026 and 2027, which could see about 400,000 jobs shed at companies that use gas for industrial purposes. The council said it was also seeing a decline in the amount of gasoline and diesel it can refine as processing plants close shop. Roy Muduni, an analyst at Sanlam Investments, says the council may be onto something, but that currently it's a wait-and-see game. President Cyril Ramaphosa has elected Dr. Kgosientsho Ramokgopa as acting finance minister. Ramokgopa will briefly stand in for Kodongwana, who has taken leave. The finance minister recently delivered the medium-term budget policy statement, signaling a need to cut costs and raise borrowing in order to keep the fiscus in check. Ramokgopa will serve in the acting capacity until November 22nd, but is not expected to make any major decisions.
South Africa's Competition Tribunal made its case on why more than 27 local and international banks should be penalized for colluding to manipulate the rand. Now, according to the Commission, the banks used instant messaging on trading platforms to share sensitive information that would inform unscrupulous trades. Now, banks such as Nedbank, Absa and Standard Bank were named as active members in the chat group, and the Commission further says Standard Chartered or SCB has admitted liability in the case and agreed to pay a fine of almost 43 million rand, or that's $2.3 million. Now, currency expert Andre Silius, director at Treasury One, explains how the manipulation took place.
When one speaks about manipulation of the rand, then it's not manipulating the currency to move into a specific direction over a longer term. This comes down to manipulation of the currency on a day-to-day basis, where you manipulate bids and offers. Now, you have to understand the trading systems within a bank and between banks and trading platforms. So, trading platforms is where banks would typically go and put in a bid and an offer. In other words, places where they're willing to buy and places where they're willing to sell dollars. When there's big ticket deals, and what we refer to there as big ticket deals is big orders that needs to go through the market. It might be for a merger and acquisition. It might be for a big ticket deal that goes through for hedging purposes of imports of cars, exports of platinum, whatever the case might be. And then the banks manipulate the currency by removing bids or removing offers so that it appears that the market is only moving in one direction. That creates a movement in the market, very short term, and that enables the bank to execute the trade then at better levels in their favor, whilst the client actually still gets the lower rate. And so it's not manipulating the currency to say, for argument's sake, that the rand's now trading at 19, and over a longer period of a year, we would like to manipulate the currency to move into the direction of a level of 20 or 18 or whatever. It's on a day-to-day basis where you manipulate bids and offers, and that influences the movement short term. The trading platforms that I refer to is trading platforms on Bloomberg, it's trading platforms on Reuters, etc. So it's a trading platform used by many, many banks. On those, there is chat rooms where traders can speak to each other, but let's not forget there's also something called a mobile phone, and there's something called normal telephone lines, there's something called emails, and traders knows each other within the market. And so there is talk between traders. I take it back from my days way back in 1985 and 86 and so forth, where you did call banks on a daily basis. You called your friends in the bank, on the opposition banks, to find out what they see, what do they think of the market, etc. And sometimes there was an exchange of more, call it, these decisions and discussions around certain transactions going through the market. In later years, it did obviously follow through to conclusion and collusion between traders in manipulating these things between bids and offer spreads. And obviously in these chat rooms where they should never have chatted about that, it was picked up, and that's where the whole Commission of Inquiry was established and the Competition Tribunal to investigate these things.
Let's take a quick look at other business and trade news that made headlines during the week.
Economic activity is at its lowest level since last year, according to the latest Newzroom Afrika Economic Transactions Index. The index recorded a decrease to 1.216 trillion rand in October. Economist Elise Kruger says this is due to the effects of ongoing power cuts, elevated interest rates, a lackluster job market, and low confidence levels.
So Betty actually dropped now for the fourth consecutive month, showing weakness in October particularly, and also showing that, the moderation that we've seen already in quarter 3 continued into quarter 4. So that is really, in my view, a reflection of the ongoing economic narrative. We still have a lot of challenges. We still have our interest rates at high levels. We still have a cost of living scenario playing out that's not conducive to economic growth. And particularly in October, which was the data point that we now released. Now, if you think about fuel prices, we had significant fuel price hikes. Almost 2 rand to the litre for diesel and more than a rand to petrol. So all of those, I would say, negative economic factors in combination result in moderation in economic activity. And then especially given that the Betty is calculated in real terms. So if we adjust it for the higher inflation rate, then it also, impacts negatively on the Betty.
The trade environment is facing increasing pressure, and both current and anticipated trade conditions received negative evaluations in the latest SACCI Trade Conditions Survey. According to 56% of respondents, trading circumstances now are worse than they were in October 2022. Only 32% of respondents reported an increase in new orders in October, while 70% reported a fall in sales volumes. Only 35% of respondents said they had employed new employees in October, indicating how the limited trade conditions have harmed employment figures. 45% of the participants are thinking about hiring during the upcoming half year. Absa intends to purchase HSBC's Mauritius assets for an undisclosed amount. HSBC is selling Absa's wealth, personal, and banking operations in Mauritius. About 38,000 customers are included in the arrangement. The deal is anticipated to be finalized by the third quarter of next year, but is still subject to regulatory approval. Petrochemical giant Sasol had to cancel its annual general meeting after it was disrupted by protesters from the environmental activism movement, Extinction Rebellion. Sasol's executive and board were already under fire before the meeting, with some asset managers accusing the board of not progressing fast enough to meet the company's climate change targets, including cutting emissions by 30% by 2030. Before the interruption, outgoing CEO Fleetman Grobler highlighted that the company remained committed to an affordable, sustainable approach to achieving lower emissions. Extinction Rebellion's Gauteng activist Malik Dasu explains why the group interrupted the AGM.
Sasol is the single biggest point polluter in the world. Them and Eskom alone contribute to more than 50% of South Africa's total emissions profile. It's just staggering that one company can produce so much harm on a global level. But the real reason we were there was to send one message to Sasol, and that's that we want to breathe. We engaged communities from Secunda, from Sebokeng, from Vereeniging, the Greater Vaal area, basically to understand what they're living with on a day-to-day basis. We gather testimonies from people who've seen their children die in front of them because they can't provide them with the medical services they need, because of the respiratory issues that they're subjected to because of living in Sasol's fumes. So that's what we were there to say, is that Sasol needs to clean up its act.
And in some company result news, Dipola's revenue improved to 1.4 billion rand. Distributable earnings decreased by 6.9%, while net asset value increased by 2.1%. The net finance costs increased to 314 million rand, and that's due to interest rates. However, Dipola stated that it does not anticipate a recovery in the South African economy as long as interest rates and inflation are high due to the high level of volatility. The company chose not to comment on what it expects in its upcoming fiscal year.
Dipola's portfolio, just to remind our viewers, comprises of 170 properties, largely in Gauteng. Retail accounts account for the bulk of the gross income, and Gauteng is the largest province by gross income. So even though they've come out and said, look, they don't expect the South African economy to recover anytime soon because of rising interest rates and inflation, they've actually decided against providing a guidance of what to expect in the new financial year, which is obviously quite, it's unusual, because usually companies do give us that type of guidance, but they have not, because of the high volatility that they're currently experiencing in the market. The group's revenue did improve by 3.2% year on year, as well as the net asset value, and although the distributable earnings fell by 6.9%. On the positive side as well, they've seen an improvement in tenant retention by 12 percentage points, and they've seen an improvement in vacancy rates, which reduced by 4%.
Let's take a quick look at other company results before we take a break.
The continent's largest retailer, Shoprite, says the group sales improved by 13% in the first quarter of the 2024 financial year. Shoprite says for the 52 weeks ending September, it was able to increase its market share by 124 basis points. Although sales were up at the group, which houses Checkers, Usave and Liquor Shop among others, load-shedding costs still weighed on the retailer, which had to spend 281 million rand to keep the tills ringing and fridges cold during power cuts. Vodacom Group has released solid interim results for the 6 months ended September this year. Group revenue was up 35.5% to 72.8 billion rand, positively impacted by the acquisition of Vodafone Egypt. The telecoms giant now services a combined 196.2 million customers across the group. Data traffic in South Africa was up over 45% as customers used more smartphones. Vodacom now has a healthy fintech operation as financial services customers transact $1 billion per day. The telecoms giant has spent 4.5 billion rand over 4.5 years to mitigate the effects of load shedding. At the beginning of its 2024 fiscal year, Harmony Gold reported first quarter operational free cash of 3.2 billion rand, almost 4 times higher than the previous year. The spike was caused by the rand gold price, which was rising at an average rate of 1.13 million rand for every kilogram produced. Among the highlights of the 3 months that concluded on September 30th is a 17% rise in overall quarterly gold production.
While South Africa's unemployment rate eased slightly in the third quarter, with the economy adding around 400,000 jobs in the third quarter. But despite this, the country's current slow growth of below 1% does point to some concerns, and that saw the unemployment rate recede slightly to 31.9%. Now, Stats SA says formal sector jobs increased by 287,000 in the third quarter, while informal sector employment increased by 29,000 over the same period. Nedbank's chief economist Nikki Weimar says despite the slight growth in jobs, it's still concerning to see other major sectors such as mining and manufacturing cut jobs during the period. Weimar also says the bank does not expect the country to have job-creating growth in the next 2 years.
Well, we're not going to have it over the next 3 years. I mean, I think that is the key point. I don't think that us growing at a slow pace will necessarily result in mass retrenchment like we saw during lockdown. It's not that sort of pressure. You're going to see it in the sectors that are hardest hit by our unique set of problems, especially the structural issues, that being mining and manufacturing. But everywhere else, I think you're just going to see that you're going to have very slow job creation, and certainly too slow to compensate for the growth in the labor market. And we're looking at a growth rate of less than 2%, actually close to an average of 1.6% over the next 3 years. And it's because of the issues that we have that is just holding back growth. And we've mentioned them, your road, rail and port inefficiencies. On top of that, also, of course, a very pressing one is the fact that the electricity shortage remains in place. It may have eased a little bit of late, but we haven't resolved the problem at all.
S&G Grant Thornton's Director and Head of Business Units Consultancy, Omar Hassan, says while the easing unemployment is encouraging, concerns about the skills shortage in the country are mounting. Now, the firm's latest SA Business Pulse survey highlighted that while 70% of businesses are looking to boost investments in upskilling their current staff, they are worried about future employment, particularly of youth entering the workforce. Take a look.
The discussions we're having is almost looking at where are we from a skills perspective. What we saw from the survey is about 50%, so we interviewed about 100 different senior executives across 100 mid-market companies. 50% are looking at saying that skills shortage is a concern. Skilled workforce is a concern and a constraint in terms of the ability to execute. So the discussion we're having, of course, is where does that actually lie? How do we as an economy in South Africa look and harness and harvest the right skill sets to be able to grow our economy? From a mid-market perspective, there is positive because they're looking at investing. So 69% is looking at investing in skilled workforce. They're seeing this as a key, a constraint, but a key lever to move in order to actually get some profitability and get some growth in the market itself.
And where are those gaps, that you are seeing when it comes to those skills? What industries are facing a lot more of that skill shortage, no matter where they look in the country? Talk us through that, but also where we are seeing perhaps, younger graduates and so on coming in and also upskilling themselves as they wait for employment opportunities.
Yeah, I mean, a great question. I think for me, where we're seeing certainly a skill shortage is in industries like technology, health, finance. Specifically, we're seeing a technological age where we see, of course, countries in the West, etc., focusing and harnessing technology to grow efficiency. In South Africa, there's specialists when it comes to data scientists, whether it be engineers, whether it be developers, etc., as a key skill shortage. That supports us in a lot of companies looking at the focus on digitization and automation to enhance their efficiency in terms of how they operate. Also helps improve their cost-to-income ratio, helps to improve the way they serve customers, etc. Those skills are critical to be able to move forward from that perspective. So we see that's an area of shortage. In the medical space as well, our stats have come out to say there's shortage in terms of medical doctors, medical nurses, could be some leaving, going abroad, and of course we see that brain drain in the country in that perspective. Another core element which is quite fundamental as we move on and start executing on our infrastructure projects is the shortage of engineers. And specialists in that space itself. For us, what's come out on the data is it's another sector or subsector of skills that's, again, lacking. And an area where we've got to take concerted effort as leaders of businesses within South Africa to look at how do we harness that, how do we grow it to help build our economy.
Reuters' David Doyle brings you the week's business headlines from the rest of Africa now, including a major debt deal by Tullow Oil and an activist call to cut off funding for Africa's biggest FDI projects.
Here's what's been making the business headlines in sub-Saharan Africa this week. Banks and other financiers should withdraw their support for Total Energy's $20 billion liquefied natural gas project in Mozambique. That was the message from environmental lobby groups in a letter sent to more than 24 project funders on Friday. The letter comes at a crucial juncture for the French energy company as it prepares to relaunch Africa's largest foreign direct investment project. Activists warn that it could worsen climate change and fuel human rights abuses in the impoverished southern African country. Also in environment news, the World Bank has warned that Kenya could lose up to 7.25% of economic output by 2050 if it does not take strong action to adapt to climate change and mitigate its effects. It called for increased investment in water resources management, farming, energy, transport and digital systems to help reduce the impact of a warming planet. Tullow Oil has signed a $400 million 5-year debt deal with Glencore to help manage its senior notes maturing through 2026. The West Africa-focused company has also signed a contract that will see Glencore take over marketing the crude from its flagship Ghana oil fields. Ethiopian Airlines on Tuesday placed an order for Boeing 737-8 MAX narrow-body jets, nearly 5 years after the 2019 MAX aircraft crash that led to the grounding of the global fleet. All 157 passengers and crew were killed in March 2019 when an Ethiopian Airlines 737 MAX crashed shortly after takeoff from Addis Ababa. Ethiopian Airlines CEO Mesfin Tasso said that they believe they have checked and confirmed that the design defect of that aircraft has been fully corrected by Boeing. And finally, Niger has missed payments on interest and capital totaling $304 million since a July coup. Data from a regional debt management agency showed on Tuesday. Niger has been suspended from the regional financial market and central bank by the Economic Community of West African States and the West African Monetary Union after the military coup that ousted President Mohamed Bazoum.
Well, we're almost at the end of this week's segment, but let's take a quick look at what's coming up in the new week before I let you go. We'll have the markets updates as usual with leading analysts and portfolio managers every day at 9:30 and 12:30, and they'll be digging into some of the news that moves the markets. And on the corporate earnings front, our Netcare's interim results and Barloworld's annual results. Will be in conversation with the executives from both companies there. And out of statistics, South Africa, we have the land transport survey for September, food and beverages data, as well as tourism accommodation. We also have the consumer price index for October out, and that's significant as the Reserve Bank will also be holding its monetary committee policy meeting later on in the week. That's on Thursday, and is expected to announce its latest interest rate decision on Thursday. And in other news, out tomorrow, Zero Carbon Charge will launch the country's first national network of 100% renewable energy-powered EV charging stations in Vormerrandstad in the northwest. So that's good news for all those that already have their electric vehicles, and it will be the first in a network of 120 renewable energy powered electric vehicle charging sites across the country, and will be spaced in 150 kilometer intervals. So that's an interesting story to look out for in the new week, and of course those interest rates decisions as well. Dumisang Glovo is with you tomorrow morning on the AM report from 6 a.m. and I will give you an update on the stories that I will be following throughout the week. That's all we do have for this afternoon. From me, Dogozo Kumalo, it's goodbye for now.